Well, first of all, this is a 4-hour chart. Let's kind of just quickly look at the daily. And when I'm looking at the daily chart, by the way, this is Euro USD. First thing I really look at is the moving averages. Oops, that was supposed to be a drawing tool. There we are. I kind of look at these moving averages. That's the only thing on the chart that I'm looking at right now. Big questions are, you know, where's the 5 EMA? Okay. And two things. Are we going to touch it today? And if not, how far away from the 5 EMA are we? So like, if you look over here, in this scenario, we're nowhere near the 5 EMA. And when that happens, very often you come back and you come back to the 5 EMA. And that's called a mean reversion. And then you go through a normal sort of period of, you have a down day here, pull back to the 5 EMA, down day, pull back to the 5 EMA, down day, and now again, we're a million miles away from the 5 EMA. So we either revert to the mean, right, go back to the average, or move sideways until the average catches up. In this case, we just kind of move sideways, 5 EMA kicks up, and then down, retrace to the 5 EMA, down, retrace to the 5 EMA, down, retrace to the 5 EMA, down, you know, so on and so forth, and then finally a break. So that's kind of the first one. And then I'm looking at the angle and separation between the 2155, which just represents the direction of the market and the speed of which it's going in that direction, right? So I look at the combo of 2155, and right here I see, you know, they're almost touching, and they're moving sideways, which tells me if I'm using my MACD set at 2155.8, my MACD is near the waterline and flat. Okay, so there's not a lot of direction, but it doesn't feel like it's heading down anymore. And then when you take this old bottom and then this high and then the retracement and then the high, right? So I had it sort of consolidating in here and then moving back down eventually. Now, when did I draw this? I don't know, 3 weeks ago? Okay, so time to update our analysis maybe. But you know, if we look at this, if I zoom in a little bit, you can see I have this area here highlighted as resistance. And of course this will be resistance. Those are monthly pivot points. And we've already topped out on the monthly pivot. And to the exact pip too, by the way, which tells me somebody large, or maybe perhaps the entire institutional market, is watching monthly M4. Which is cool. We touched it and respected it. So now what? Well, if you're a bear, you're looking for this opportunity, which we already highlighted, like I said, you know, many days ago. Does it look like it's dropping here? Not yet, in my opinion. Okay, you could be ready for it on a smaller time frame, and that's why we have things like 15-minute charts and 1-hour charts. You could say, well, if I get a reversal pattern here on the 15-minute chart, I could take the shot because I'm at resistance. So you might sell it, you know, I mean, really, it's as close to 110 as possible, right? Get the psychological level in there. Now, if you're a bull, ideally, what you're looking for is you want to ride this 5 EMA as I had showed you, and sneak through that 110 area, and your next major resistance is 110.50. And by the way, right after non-farm payrolls, the 110.50 was what I had identified as resistance the whole time, not the psych level of 110, which one might expect, but 110.50, which is the actual reversal pivot. And I think there was like a weekly up there at the time, and it clustered. All right? So again, a bull wants to ride the 5 to the upside. And a bear would do something like drop into the 15 and say, all right, we're at resistance. We know that much. And you, if you're a bear, then you believe the long-term trend. I should have just changed charts, but I just had it drawn. There we go. Okay, so based on your analysis of long-term charts, this gray area above us is the place where you want to sell. Okay? So, what do you look for here? Well, the first thing I analyze is, the moving averages, 21.55, and they're dead to me. Because they're supposed to represent the direction of the market. Well, it's moving sideways. So how do you trade this then? You identify and trade it as a range trade. And I'll throw another one in there. And so if you're a bear now and you want to take this to the downside, you must wait to touch resistance, either there or there. Then, right? So it's an if-then statement. If price touches resistance, then maybe even on a 5-minute chart, take it to the downside. Okay? And the idea eventually is that if you're a bear, that it's going to break to the downside, pull back and sell. And that's opportunity number 2. Those are the two. And my favorite out of these, out of opportunity number 1 and opportunity number 2, is probably number 2. I mean, the day could work out like this. Okay, and I'd sell there. That's what I prefer versus selling at the high. I'd rather just let it break out and catch the retracement, just a standard breakout scenario. Does that make sense? All right, so that's pound dollar. Let's do USD CAD. All right. Oh, got my drawing tool on here. All right, let's try this. USD CAD is next.